Let's talk about the ATO's crackdown on rental properties. So we do hear this every year that rental properties are always a target for the ATO. And why is this? Well, the ATO is stating, this is their data, telling them that 9 out of 10 rental property tax returns are incorrect, even when completed by a tax agent. Based on their 2021 tax gap figures, they're stating that the underreported taxable income that they should have received was around $10.2 billion when it comes to rental properties. So the tax gap is a difference to what they've received in income tax take-ins to what they believe they should have received. So with this figure being so high, of course they're going to put their resources and everything that they can into trying to find that missing income. So let's break down how the data matching process works with rental properties. So when you first purchase a rental property, this gets reported to the ATO, who the owners are and the amount. Then, if you actually have a loan, this loan also gets reported to the ATO from the bank. So they know how much the loan is for the life of the loan, how much the charges are, whether they're bank charges or interest, whatever it is. Then if you go to rent out that property, you could be renting privately, but that bond is going to be reported directly to the ATO. If you go through a property manager, the property management software now reports to the ATO, not the property manager, but the software. If you're going through short-term accommodation providers such as Stays or Airbnb, they're required by law to actually report to the ATO now, and this came out 2 years ago, and they report twice a year. So all of this income is reported now to the ATO. The ATO knows when you buy a property, they know what income you're receiving. They also know when you've got insurance. So landlord insurance is also reported directly to the ATO. These landlord insurance providers are actually listed on the ATO website. So you can check that out yourself for a list of insurance providers. But basically it's all insurers in Australia must report this information to the ATO. So they report who the owners are, how much it's insured for, and any claims that have been made or paid to you as well. So as you can see, all of this information is provided. When you go and sell the property, again, that's reported directly to the ATO. So a lot of people are wondering, how do they get this information? So when you lodge your tax return, you may not have been pulled up as it being an issue or for a review, but generally the ATO have 2 years to actually pause and actually look at those returns and say, hey, we've just been flagged this information. And if for some reason they get information that they believe is tax evasion, they can go back as many years as possible. As always, this is education. It is not scaremongering, but you need to understand how this data matching protocol and process works. Follow us for more.